Hey, Side Nation, what is going on? Happy weekend. I hope every one of you had a chance just to relax, rest, and have some fun aside from the market, right? Or whatever else that you have going on in life. Want to come at you with a market overview for this coming week. We have not hit the 60 likes yet, but I am recording this and going to release it in anticipation. And regardless if you get it or not, I still want to give you all something to help you prepare for this coming week. We have a big week in terms of econ events. We have earnings with NVIDIA, and we have the talk about the debt ceiling. Just a lot going on this week. FOMC minutes are being released, not FOMC itself, meaning that Powell's going to talk about the rate hikes, but just the minutes on recapping what's going on and what has been said, and potentially a little bit small updates. Nonetheless, it still may impact the market on Wednesday at 2 p.m. U.S. Eastern Time. With further ado, let's get into this. Again, this is for educational purposes, not financial advice. Use it as you will. What you see on your screen right now is SPY on the daily time frame. So you're going to see a bunch of stuff on here, and it's going to be a little confusing, especially if you're new to the market or you to me. Just bear with it. Slow down, and you will start seeing some of the stuff and understanding it. So again, this is SPY on the daily time frame, right? We're going to kind of walk over this high level, and then we'll go break down a little further detail. And then tomorrow morning, before the market opens, we will do a pre-market game plan off of this data. So right now, what you see, these little blue cups at the bottom is signifying a potential inverse in head and shoulders, right? So you see the shoulders right here. This is the long head and potentially shoulder down here. The reason I drew that out is because we have this neckline here, right? So this is the neckline. This is where the order blocks are, supply, some fair value gaps, depending on what your trading style is, imbalances, right? And this is essentially August's high, August 16th, 2022. And then we hit this area again back in May 22. And again, you can see we hit it back here again in March. So this is an area, a hot contested area. We are in it right now. We're actually technically in it. The question is whether we continue up and tap that 430, or do we reject somewhere between 420 and 425? That is to be seen, obviously, this week. So that's why we drew this inverse head and shoulders, because if we don't break through it this first attempt, then we know that we're coming back down, and then to find some support somewhere, maybe around the 380, 400 range, and then make a bounce back up and test that neckline again at some point in the future. Other patterns we have is this rising wedge, right? So we have this rising wedge that we've been talking about for quite some time now. So that is something else to keep in mind. I'm going to zoom in a little bit more so you can see a little bit better what price is doing. As you can see, I told you, we are in this order block, this imbalance zone, this neckline. So it's a matter of whether we're going to continue up further or not. That is really a question. So we are on this. We did break through this upward trend line on Friday, the smaller rising wedge, and we came back down. We closed right below it. So the question is, are we going to break above it again and test it? I did draw this other trend line from February's high, and then we hit that in May, 1st of May. We broke through it on Thursday, and you see we pulled back, and we literally tapped off it on Friday. So we, the question is, we broke through out of this. Do we, we broke out, pulled back. Now, do we see Monday as a, bounce off this and continue up confirmation to test, break out of this trend line and potentially test this other trend line? The other thing to note is, look, we have this is a two up, this is another two up, but it's a spinning top. It's a bearish spinning top. The thing I want to point out is that we might be able to, excuse me, be able to consider this maybe, no, I would just leave it as that. I think this is pretty much a spinning top, signifying potential shift in direction, right? Because we had nothing but continuous ups from Wednesday, Thursday, and Friday. It's still up, but this is now changing directions. What you see here, this box here, is this is the gap. It was a gap that got partially filled. You can see it's from 420.72 to 421.22. The reason why you can't see it is because it's condensed. As soon as I expand it, you can see it. So we have another gap down here that has not been filled yet. At one point in time, we will come back and tap this. Whether it is the rejection off this zone here, these lines these trend lines, this gap, and then we could start making our way back down to this, 407, 408 mark, which is not unfathomable. I think a lot of people see this and that think it's a big drop. That's really not a big drop, right? You can see that within 3 days, SPY made pretty much a 12-point move. So we can do that in a couple weeks as well. Come back down here. So that is kind of what we have for going tomorrow. Potentially looking to see if we are going to continue further up or if we're going to start doing a pullback, right? This is a sign that we have to keep out for. Let's flip on the weekly time frame real quick. This is where it gets a little bit interesting, right? So this was last week. This was a 2 up. This was the previous week, May 8th May. This was actually inside bar. You can see that this candle here was contained within this massive mother bar. So this is the 1. This is 2 up. Technically, we have a 1-2-2 combo going tomorrow on the weekly time frame, right? So that means it will take at least, we have to give it at least a week for it to play out. Could it happen earlier? Sure. But if it doesn't happen within the first 2-3 days, doesn't mean that it's not a valid combo, right? Because it's a weekly time frame, we need to give it at least a week to play out. That's how I look at it. So if that is true, if we cannot break above, let's just say the daily 50% tomorrow, we're close, and then we could get below the weekly 50%. I'd be looking for that down week, right? That's where my intentions. If we cannot break above, the 419, 420 essentially, I'd be looking for potential short to the downside to take out last week's low. So that would give you pretty much from 420 to 410. Not sure if it happened just because we've been in this consolidation phase for a lot. So we'll see. We could end up as a 1, 2, and maybe even 1, or it could just be another 2 up and it failed 2 up, where it just kind of consolidates a little bit. And then the following week, we have that 2 down dump. But then again, remember, next week, not this coming week, but the following week after this coming week will be the last week of May. So that would be the end of the month, and that will change things. So kind of that's what I'm seeing for tomorrow is that, we have our zones. Let's just continue on with that. So let's look at the QQQ. This is where it gets a little bit interesting. Very similar to SPY, meaning that they move the same direction very similarly, but they comprise of a little bit different in terms of what's made up of that ETF. So it moves a little bit differently. I would say that Apple is weighted twice as much in QQQ, around 13% versus SPY, which is about 6%. So therefore, when Apple moves, it impacts the movement of SPY or QQQ a lot more heavily than it does in SPY. The interesting to note here is, look, we have very similar pattern. We have this inverse head and shoulders. Here's the shoulders. Here's the head, right? A little bit more cleaner, right? Because you can see SPY's head was more of a rising, higher lows, higher highs, etc. Right? Higher high, higher low, higher high, higher low, and then we potentially make a higher high. Actually, we did make a higher high. This is actually broke this right here. So, but with QQQ, you can see that it just was a cleaner movement, right? This is your classic inverse head and shoulders. So we can use this as part of our analysis on what SPY could potentially do as well. Or you can trade the triple Qs. No different than SPY. Same cost in terms of the options and also the same expiration, right? At 5 days a week, 0 DTE. So pick your flavor. But the reason why I'm pointing this out is because, look, we have the same thing, rising wedge. We have this supply zone, liquidity, water block, fair value gap, whatever you want to call it. At the end of the day, it's kind of what you want to call it. There is technical differences, but for generality, when people are trying to trade this, once we get to the zone, it's gonna do something, right? In the sense that it's either gonna consolidate and eventually break through, or consolidate and eventually reject to the downside. But the interesting thing, as I said, look, this is August highs, right? This would be 430 on SPY, but on triple Qs, it already broke that, right? This was at 334. To be more accurate, 334 and 42 cents, right? Well, SPY triple Qs broke that, right? Triple Qs went up to as high as 338.24. So it actually broke it with decent confirmation. So now that we broke through it, the question is, do we pull back and retest this line tomorrow? Or do we continue back up and hit this trend line and then see if we reject. Again, the top of this zone here is going to be at 347.87, which they'll probably bring up to 350 just because it's a whole number, and that's how algorithms work. So that's something I want you to keep a note of, is that, hey, triple Qs have already broken the high of August. So, we can, it could be a pullback. If it is a pullback, that might mean SPY will also pull back as well. The other thing I forgot to point out when we're on SPY is that we are also overextended on the daily time frame. You can see that we're overextended by about 2.4 points. I think the weekly, no, I don't want to say we're overextended yet. We're not. But that is what we need to take into consideration, as well as the triple Qs, right? Overextended as well. You can see that it's overextended by almost 5 points, about 5 points. Again, so, but the thing is about the triple Qs, they don't have, it was not an inside week. It was just nothing but straight up twos, right? Two up, two up, two up, two up. This is a very strong two up on the weekly, right? We say it's a spinning top because even pretty much even wick on top and bottom, but the body's so big. This is, to me, just still a very bullish candle on the weekly time frame. But that's why I wanted to point out on triple Qs is that, hey, we broke the high, we overextended, and we might, it's a spinning top on a daily time frame. We might eventually pull back and test this 334, which would be about 2-point pullback. And then, if we hold, we may bounce back up and test this trend line. So something to keep note of, like I said, if you're monitoring QQQ tomorrow while you're trading SPY, that can be a helping indicator or confluence that you might be going to the downside or upside, whatever side it's going. Let's look quickly at the quad real quick, right? Oh, man. Maybe just type the symbol in correctly. Okay, so we have the same thing, right? This is all-time highs. It's insane to think about it, that if you were trading commons, even if you got in at all-time highs, you'd be pretty much at what's at 183. You'd be down about $8 a share, which is nothing compared to the all-time lows for 123. So you almost made a whole entire recovery. And if you were trading commons and you actually dollar cost averaged in at any given point in time, you probably would be break even, if not even on top. Let's say you didn't even average in at the bottom here. You averaged in somewhere, maybe let's say 150. 150, and then, let's say you had $10,000 invested here, you dumped another $10,000 here, so you 183 and then 150, your cost basis now is probably sitting, between like 165. So you actually be up $10 a share. So that's kind of the beauty of trading commons. You can just hold it a long time, and it can make a recovery like this. Anyway, this is the neckline supply zone. I'm not going to keep pointing out. Every time you see this box, this is the zone that we're looking at, and we're going to be interested in this week. The thing I want to point out about Apple is the fact that it's been on a tear. It's overextended as well. So this is a two up. It's about to hit this upward trend line. It's in the zone. So we're going to see what it's going to do. It did break August high. So again, it broke August high. So we don't know if it's going to kind of test that again and then reject and come back down. So that's something to keep a note of, is that Apple is setting up for potentially a reversal tomorrow. Could be wrong, but we'll see. It was an outside week. You can see that this was an outside week. So we might be expecting maybe a 3-2 up or a 3-1 for this week. I don't know if we're going to see a 3-2 down, just because it would have to make a decent move. To me, I don't think we'll do that, but we'll find out. The other thing I wanted to point out is that we had this downward trend line drawn from all-time highs, right? We broke out of it the previous week. This last week, we stayed above it, so we're not sure. And when we're hitting this topward trend line, we might pull back, hit this trend line again from all-time high, and then eventually make that upper leg back into the zone. So something to keep a note of going into this week as well. Let's check out Amazon. A lot of these will have very similar patterns, right? We'll have this, the zone, and then we'll have our price action going into it to see whether we can break it or not. The other thing to note is we have the Amazon, the 50-day and the 200-day. 200-day is this golden line or yellow line, and the 50-day is this teal line. It is getting very close to crossing, and that is called the golden cross, right? 50 crosses the 200-day to the upside is called the golden cross. And that usually signifies a bullish movement. It has not crossed yet, so just keep that in mind. It is in this zone right here, but on Friday it was two down, right? So technically, going tomorrow, we might have a 2-2 upside going to Monday's action. The only thing is it is overextended. We did break out of this trend line, upward trend line, or trend channel, right? Broke out of it on Thursday, came back down and retested on Friday. Now the question is, do we come back in under or do we bounce up and go up above? But we have this zone that we need to watch out for. So these are the things I want you all to start looking at. And we are also overextended as well. Let's just kind of look at the daily time or weekly time frame. So we have a spinning top on the weekly, right? Two up, still spinning top. Overextended as well, right? Overextended as well. So we still got to come back down potentially. That overextension is around 107. I think we're also overextended on daily, which is at 113. So a lot of room for it to come back down. Every time we're overextended, it does come back down. You can see back in February, overextended, came right back down. In fact, February we're at 108, and the next day it came all the way down to 102. And 6-point move on Amazon is huge. That is a huge move on Amazon. So that is Amazon itself. Let's go to Microsoft. Same thing. We had this inverse head and shoulders pattern, but we will switch it a little. Here's your shoulder now. Here's your head. This would be your shoulders right here. We will shift the diagram a little bit and adjust shoulder, head. Potentially, we are above. We already broke above August's high. Like Microsoft just went on a tear because the earnings and whatnot. It broke August's high. We're pretty much back and in last spring's zone right now. So we're gonna see whether we break through this this week, and then it could potentially go back to all-time highs. It's not. It's the crazy thing is like everything's almost back to all-time highs. You know, I would say 6 months ago, nobody even thought this was realistic. Everybody thought we were probably going to the low 300s and maybe even the high 200s, right? Not saying that can't happen, right? You know, anything can happen as on the drop of a dime. But right now we are in this zone, looking for it to potentially, this is an inside bar. So right, we have 212 tomorrow. We might have. It really depends on what futures does tonight. So we'll see whether futures makes us move up. If it is, then it'd be 2 up. Maybe it failed 2 up. If it doesn't, it'd be probably 2 down tomorrow. But it is overextended as well, right? So at 313 is the cloud on the daily time frame. Let me apologize. There's a lot of old lines that I drew, but we will shift our shoulder over here. But trend lines, we did break out of it. We can draw another trend line, from a swing high. We can see that it kind of still broke through. So there's just Microsoft is just looking very strong right now. My only concern is that it had a massive run, right? There's a major gap down here that at some point in time will be filled. It's not that far away. It's in the high 280s. Not unrealistic for it to do that. To me, this has been a very powerful run. Within less than a month. We went from 275 up to pretty much 320, right? So almost like a 40-something point move on Microsoft, which is huge. So again, this is 212 going to tomorrow. Let's kind of look at the weekly. The weekly is powerful, 2 up. It's nothing but 222 up. So again, be looking for this zone right here to see what it does. That's kind of what I'm looking at. Let's go to the last one for the Google on the daily time frame. So Google is very interesting. This is the one that we're all interested in, or at least I was interested in attempts to play it to the downside. Inverse head and shoulders again here, rising wedge here, or the channel. This is the the neckline off of August high. We broke through it, but as you see, as soon as we broke through it, we rejected and came back down. So that just means that there was a lot of supply here, a lot of liquidity to get ready to be absorbed, because a lot of people probably had their stop losses somewhere around here. And what they like to do is they like to push it above the stop losses, collect all that liquidity, and then trap all the people that, went long here. and then potentially push down, right? The biggest thing to know is that this is a shooting star, right? This is a very, very powerful indicator for Google, is that it's a shooting star on top of a peak. Usually, and shooting star usually just means that it's coming to the downside, right? This is what a shooting star looks like. And you can Google these patterns, and what these means, but that's a shooting star. And usually when it's on a peak like this, that's the start of a downturn. If that does, that could impact SPY as well. So this is the zone, that neckline. This up here is actually a fair value gap. Would actually, excuse me, like to see it tap this fair value gap and then continue down. But you know what? We'll keep an eye on this tomorrow. This is very, very high on the watch list for tomorrow because it's a shooting star. We're overextended. You can see that's at 118, right? We have this inverse head and shoulders pattern. So that is what I'm very interested in for this tomorrow. Let's go on the weekly time frame. The weekly time frame is where it gets very interesting, in my opinion, because now we're looking at a bigger projection longer out and what potentially can be done. This to me is I would not consider this an inverted hammer. The body is still way bigger than the shadow, the wick, or the tail, however you want to call that. But it does show that on weekly time frame, look, the sellers are not completely dead. They have not bent over completely for the bears, right? Or for the bulls. The bears are still here. The previous week you can see is just nothing but solid, straight bullish candle. The thing to note is that we are also overextended on the weekly time frame as well, right? It's at 110. The other thing that's really interesting is on the weekly time frame, look, the 80 may cross the 21 and cross the 34, right? So that is kind of the interesting fact of it. And then the clouds are starting to flip bullish. But what I'm taking note is that, look, we have the 200-day here and we have the 50-day here. They are getting very, very close, right? So remember when when 50 days below and 200 days above, and they cross each other, that's called the golden cross. When the 50 days above and 200 days below and they cross, that is called the death cross, right? Signifying a potential shift to the downside. I mean, we can go back and look where that happened as well. So usually when it happens, it shifts the price down. Not all the time, but that is just something I want you all to take note of, right? When that happens, it could affect the way that price moves. Just something interesting. Again, this is weekly time frame, so that does not mean by the end of this week that it's going to happen. That means that this can take months. This can wait until pretty much maybe sometime in the middle of summer, like July, maybe in August, before it even crosses. It just takes a while. You can see even with this whole entire movement, it still hasn't crossed, and this is weeks, right? So this is going back for years. So just something I want you to take note of for those people that like to trade a little bit longer time span and not on a daily time frame. So, but just something to note, like I said, every time we had this death cross, right? Here's death cross. Didn't necessarily happen right away. You can see that it rose, and then eventually we plummeted. Again, we had, death crosses throughout the thing. It doesn't always pan out. It's just something to think about when it happens. Here's another death cross right here, right? Death cross, but then it was at pretty much at the bottom, right? So it's just kind of taking a look at it, and seeing what price does, and then trading accordingly. Again, a lot of different other factors and variable has to line up, in my opinion, for it to play out that way. But the biggest thing for me is the fact that we are hitting a key zone area with a lot of liquidity imbalances. We have a shooting star, we're overextended, and we just had nothing but a massive run for pretty much, I want to say since earnings, right? Since earnings, it pretty much just had this massive run. May 10th, right? May 10th. I mean, we went from 107 up to 125 on Google. That's huge, right? Google usually moves maybe 3 points a day, but the fact that we made what is it like? We can even say as soon as we broke out, from 105 all up to 125, 20-point move in May 8th, 14 days, like 12 trading days. That's huge, right? And like I said, no real pullback. There's a little bit of consolidation here, and then rock it up, and now we have this shooting star. So I really do like this time for Google. Maybe you play to the downside. Like we might have a little bit more up, but then I think if you get at least a week or two expiration, you can capitalize something back into the 118s, and maybe I don't even know. It would not be crazy to hit this back gap again, 115. That's just kind of what I'm looking at. But anyway, guys and girls, I hopefully you found this very useful, interesting. Like I said, it's not a detailed overview in terms of exactly where we're getting look for trades to get in and out. It's just a general overview to see what the market is doing and what it can potentially do. And again, we talk about the quad, which is Amazon, Google, Microsoft, Apple, and then we talk about triple Qs, and we talked about SPY. So all this stuff is supposedly give you a better insight and help you out. Again, you can pause the screen here and mark off these levels. These are very important levels in my opinion. All right, guys and girls, I will talk to you a little bit later. As always, please hit that like, subscribe, and thank you for support.